Hi everybody, welcome to our DAT IQ weekly market update. This is our update for April 22nd, episode 336. I'm Dean Croak, market analyst here at DAT, along with co-host Chad Kennedy and special guest Kary Jablonski, VP of Broker Growth here at DAT. Kary, great to have you on the show.
Great to be here. Thanks for having me.
Yeah, first time we've had someone from the Trucker Tools side of the company on the show. Very exciting.
Yeah.
How was TIA? You were out there last week?
Yeah, it was great. I guess it was actually a little bit more. It was 2 weeks ago. Feels like
Right.
forever ago, but it was great. It feels like a family reunion going to a brokerage show. So it was great to see a lot of customers and a lot of partners out there. Kind of similar sentiment and themes for the last year or two, which is still tough out there. Fraud is an issue, but we're figuring out ways to work around it. A lot of kind of those same narratives.
Kary, for those that don't know you, and I'm sure there's very few, but just give people a quick bio just so they can sort of level set before we dive into some of the topics today.
Yeah, sure. So, like you mentioned, I'm the VP of Broker Growth and also General Manager of Trucker Tools here at DAT. I'm based out of Chicago, that we were just chatting before we came on about how I'm from the Boston area originally, not far from where Dean is. And have been in freight for about 4 years now. Started my career out as a management consultant many years ago, then transitioned into transportation adjacent businesses by working at Uber. I was never on the Uber freight side, but worked in ride sharing and delivery, so a lot of last mile, final mile work. And then I joined Trucker Tools after our founders, Prasad and Murali, sold the business in 2021, came in as our COO to transition the business. Stepped into the CEO role in early 2022 and ran it for about 3 years until we were acquired by DAT in December. Now in my next chapter role here at DAT, really continuing to focus on the Trucker Tools business and on visibility, but also broadening my purview to focus on the entire portfolio of broker products.
Right. This is a strange meeting I had. I almost joined Trucker Tools about 6 years ago, I think, at Prasad at a conference. So it was in between jobs at the time. So
I feel like Trucker Tools is not, certainly back then was not a very large business, but everyone seemed to have some sort of story about I Prasad almost hired me. That's so funny. We'll have to talk about that.
Yeah. Chad, what's news in your part of the world?
Yeah, things are good here. I spent the week in Denver with the DAT family. It was good to see everybody. It was snowing when I left there, and it's 90 degrees here today. So
beautiful.
But it was good to see all the people.
Yeah. All right, let's dive into the show. We'll bring Kary back in a little bit later and Chad with his forecasts on the contract shipper side. I'll start off with some of the key trends we're watching, some really important things this week. Dry van rates slid about 5% week over week. Loads moved were also a little bit lower last week. Load posts were flat, but identical to last year, just for context. Reefer and flatbed holding their own for the time being. A couple of indices came out. Last week's guest, Tim Benoit, spoke about the cash shipments index. That remained unchanged in March, but down about 5% year over year. Tim suspects that there'll be better volumes on the truckload side, supported in coming months as consumers scoop up pre-tariff goods before prices go up. But thereafter, the trade war is likely to extend the for-hire freight recession as higher prices reduce goods affordability. That's from Tim Benoit, who writes the cash shipments index. Jason Miller's truckload ton mile index came out for February, showed that volumes bounced back after the drop in January, led by the cold weather and the impact on the automotive sector. So essentially flat over the last 2 months, but up about 1% compared to last year, maybe slightly less than 1%. Housing starts off to a very rocky start. New home construction fell 11% last week compared to February. Single-family home construction saw the most significant slowdown. Single-family housing starts down 14.2% from February, down about 10% compared to this time last year. So that doesn't bode well for flatbed volumes related to single-family housing construction and also dry van with finished goods. Of course, the tariff shockwave that we've been talking about in the last couple of weeks is going to manifest itself in Los Angeles fairly shortly. Ocean carriers are starting to slow down, or what they call slow steaming in the industry, as it's referred to. They're starting to arrive past their due date. Those numbers are up about 66% last week. So we're starting to see vessels slow down to tighten capacity. The vessel arrival forecast from the Marine Exchange shows about a 10 to 12% drop in vessels arriving in the San Pedro Port Complex in the next few weeks. Long Beach and Los Angeles have reported about 6 blanked sailings, starting with arrivals due in mid-May. So we're looking like mid-May we'll start to see import volumes drop off significantly. And of course, on our shipper roundtable, Chad's got some news to talk about a little bit later. 65% of participants said they expect none or no to very slight impact of tariffs. A very interesting look at the contract shipper world. Tonight's market update that'll be out, we're diving into the latest March import results, the dire outlook for volumes mid-year as a result of some of the import trends. We're talking about Mother's Day floral shipments out of Miami and the latest from Jason Miller on his truckload ton mile index. All right, let's start with our load to truck ratio in dry van. Last week's plunge in load post volumes, fairly substantial. Compared to last year. So that was the plunge the prior week. Last week, they remained mostly unchanged. Volumes are about identical to where they were last year. Load to truck ratio down 9% to 4.20. In the refrigerated market, load post volumes were up about 7%, despite a 5% drop in North American produce volumes last week. We've been watching a surge in Mexican produce imports since the start of February, but they did drop last week. California season's off to a slow start, volumes up 2% last week, but they're still about 33% lower year to date. That's the equivalent of about 10,000 fewer truckloads of produce out of California. A lot of that volume we see hit the spot market. Hence, we're seeing some fairly sluggish load post volumes at the moment. Load to truck ratio up to 7.75 last week. In flatbed, load post volumes were down for the third week as that market cools. Volumes were down 15% last week, still 13% higher than last year. Load to truck ratio down slightly to 32.41. Having a look at some of our key indicators, dry van line haul rates down 2 cents a mile last week. The national 7-day rolling average paid carriers an average of $1.60. That's excluding fuel. Loads moved volume were 4% lower in dry van. At $1.60 a mile, line haul rates are about 5 cents a mile higher than last year. On our top 50 lanes, based on the volume of loads moved, carriers have paid an average of $1.89. That's 29 cents a mile higher than the national average. And in our Midwest bellwether states, of which there are 13, they accounted for 43% of loads moved nationally last week. They have the highest correlation to the national average. In that region, outbound spot rates were down 4 cents per mile on a 5% lower volume of outbound loads moved. Inbound loads moved also down by 5%. Carriers were paid an average of $1.79 in that Midwest region. Having a look at the refrigerated market, capacity remained mostly flat last week. National average spot rate remained slightly above $1.88 a mile on a 2% higher volume of loads moved. Reefer rates are about 4 cents a mile higher than last year. And lastly, in flatbed, spot rates and volumes were mostly flat last week, remaining at $2.16 per mile. That's 16 cents a mile higher than where they were last year in week 16. Compared to some of the previous years, flatbed rates are about 17 cents a mile higher than 2019 and about the same amount lower than 2018. So they're straddling those 2 years at the moment. Let's have a quick look at our short-term forecasts. These are our forecasts that go out 35 days using RateCast. That's our green line on the chart. It's predicting what rates will be. Heavily weighting longer-term seasonal trends is how I'd best describe the RateCast product. The forecast is bounded by the upper and lower forward-looking error bands in yellow and red, and the blue is the rolling 7-day weighted average of historical rates for loads moved over 550 miles. That excludes fuel, so it's line haul only. Let's start with dry van. We see a slight improvement on the back of the expected lift from produce season out 35 days. This typically happens this time of the year. RateCast is expecting rates up 3 cents a mile to $1.63 by May 23. That'll be about 1 cent per mile lower than where they were last year. In the refrigerated market, today's forecast spans Mother's Day shipping, which begins to start moving volumes next week in the lead up to 5/11. Early produce volumes are also going to come online in the Southeast and California as the market lifts off the seasonal lows. Accordingly, RateCast is expecting rates to rise about 10 cents per mile to $1.98 by the end of the 35-day forecast. That will make them exactly the same as where they were last year out in late May. In flatbed, RateCast is expecting rates up 4 cents a mile out to May 23 at $2.21 per mile. That'll be about 16 cents per mile higher than last year. There's certainly some exceptional numbers in the flatbed market this year. So that's the spot market. Let's go to Chad to talk about the.
Yep, thanks, Dean. And as a reminder to the audience, everything that Dean covers is from a broker to a carrier perspective. These rates I'll share are from a shipper to broker or carrier perspective. Starting with the spot premium ratio for dry van rates, this goes back to 2016. This is the premium for spot rates compared to contract rates. So it's a great indicator of how loose or tight the market is. You can see we're at negative 12%, nearly negative 13%. And so this is showing a very soft market. This is the softest it's been since May of 2024, where we bottomed out around negative 15%. And then going on to the new rate differential in blue there in the middle, this is the percentage difference between new contract rates and those rates that they replace. So we can see routing guide activity from shippers. We can see those rates that they retire and those new rates from new bids. So this answers the question, what are shippers yielding in their contract bids? We're at positive 1.3%. This is another great indicator of how the market is trending and how future contract rates will trend. We've been in the positive territory here for some time. This is better news. This is about the only good news I have on this slide for brokers and carriers. But overall, this is the soft spot markets, not great news right now, but based on the forecast that Dean just shared, hopefully this will start tightening up here soon. Going on to reefer rates, spot premium ratio at negative 10%, new rate differential at positive 0.6%, barely above zero. And that contract rate index, this is the 80% of rates that are just recurring through routing guides, and those are pretty flat to slightly down. So we would look for these to start to turn up here as we move further into Q2. And then on to flatbed. This is a monthly view. It smooths out a lot of the noise that we see in flatbed data. So ending in March, we had spot premium ratio for the month of March at negative 4.3, but one of the highest we've seen in quite some time. New rate differential crept up a good bit here. I think that lines up with the data you had been sharing there through the month of March, Dean, at negative 2.7, but higher than it's been in some time. And rates pretty flat overall for flatbed. And then finally here, just looking at the differences. So these are the inputs to some of that spot premium ratio, comparing the spot rate in yellow to the contract rate in blue, dry van on the top, temp control in the middle, and flatbed at the bottom. You can see those flatbed rates, those spot rates coming up even into April. So that's a wrap on contract rates.
Chad, I was looking at the new rate development this morning for dry van. Last couple of freight recessions, there's been a observable sort of inflection point where they go from positive year over year to negative and then back. This year, though, the change is much slower. So does that surprise you that we're seeing this equilibrium in the market last a lot longer than I think most of us would have expected?
Yeah, it definitely is. I mean, I think back to DATCon when we were talking to customers then, we expected a pretty big turn by Q2. We're still early in Q2, but we expected to see a little bit more tightening. This spot premium ratio pattern that we're seeing where spot rates are a lot lower than contract rates, I did look back, and this is a reoccurring theme that I've seen in April and May going back the last couple of years, all the while being a soft market. So I think the end of this quarter is going to be very telling as rates do start to tighten up, as produce season really ramps up, as the larger products start to ship for spring season start to ship.
Yeah. All right, let's bring Kary back in. Kary, lots of questions we've got for you today. So let's sort of tee this up with some more high-level overview. What are some of the new trends you're seeing in truck and trailer tracking?
Yeah, so I think when you zoom out and think about the cycle that we've been in since, call it, early 2022, we've just really seen more than anything massive adoption of tracking and this cultural acceptance of tracking in a way that was not there before. A lot of that's been driven by post-ELD mandate in 2017, 2018. ELDs have become much more the norm and an acceptable part of carrier workflow. So we've just seen this huge increase in ELD tracking. Some of our largest broker customers are tracking 70 or 80% of their tracks and carriers via ELD, which is just an absolute night and day shift from, call it, 5-6 years ago. I think another big trend that we're seeing is that we're embedding other core workflow like document collection into tracking, and that brokers and tech providers like Trucker Tools are thinking about what beyond just understanding where GPS dot is on a map, what value can be added and having that connectivity with the carrier. So collecting documents, PODs, post delivery, for example, embedding other sorts of tracking beyond just location. So whether it's altitude tracking or temperature tracking connected to a trailer, we're really seeing kind of the next generation of visibility emerge. And then I think finally the big trend I'm seeing and that we're certainly working on driving forward is this concept of proactive exception management and how that relates to tracking. And historically, tracking has really been driven by shippers. They want to understand, hey, where's my truck? I want to make sure I have eyes on it. There's also a fraud angle as well for brokers to make sure that they understand where their freight is at any given point. But I think more than anything, where we're seeing the benefit of tracking right now is that it enables the agents or brokers on the floor to understand, is there something I need to be doing? Do I need to be managing an exception? Rather than just saying, okay, yep, the truck is where we thought it was. So figuring out how we get the data in the hands of the end users to make sure that they can manage their customers and get ahead of things that might be going off the rails.
Right.
Hey, Kary, you've mentioned, I've heard in some other talks, you mentioned the waterfall tracking. Can you unpack that a little bit? What is that and how is it used?
Yeah, so waterfall tracking is something we developed at Trucker Tools a couple years ago. Like I mentioned, ELD tracking has really come to be widely accepted by the carrier community and preferred by brokers just since the mandates over the last, call it 5 or 6 years. And we're still kind of climbing up that adoption curve. So, and something that was really core to the founding ethos of Trucker Tools 15 years ago is that we wanted to be a carrier first app and make sure that we were tracking carriers in the way that they preferred. So with the advent of ELD tracking, rather than us kind of shoving that down carriers' throats, we've developed a methodology of tracking where we first always look to see on a broker's behalf if we can track a carrier via ELD. If we don't have their ELD, they've chosen not to integrate it into our network for some reason, we waterfall over to our mobile app, which is really widely adopted by carriers in the market. So we'll track via mobile. And if for some reason they don't have the app or they're opposed to using it, we also have a SMS, WhatsApp, it's called text to track feature where we're able to send one-time location updates and get location that way. So we just waterfall through these kind of highest fidelity to lowest fidelity types of tracking so that we're able to meet the carrier where they are and make sure that they have agency in how they're deciding to share their location with us.
That's fascinating, solving the problem from a few different angles. That's
Yeah.
cool. You also mentioned shippers kind of traditionally being the pool for tracking. But most of your customers are brokers, but I think you do serve some shippers as well. Is that right?
We do. Yeah. We are primarily a broker tracking app, and everything we've built really has been focused on brokers, but we're seeing, especially now that we're partnered with DAT, rising demand from shippers to work with us.
Right. Yeah. Makes sense.
Kary, any sort of resistance from carriers that we should speak to? Maybe is it education? Is it sort of fear of Big Brother watching them? What are sort of some of the things that you get pushback on?
Yeah, it's definitely a lot of that fear of Big Brother, which is totally understandable. I think the cultural ethos of being an owner operator, a lot of it is around I get to be in control of my own destiny and build my own business in the way I want. So completely get that. Though I do think over time there is becoming, as we just are all more connected in our day-to-day lives and the proliferation of smartphones and location sharing and all of that with friends and family, there's just more of a general acceptance of, I understand why this is helpful. But I think more than anything, what we talk to carriers about when they're reluctant to share things like location updates via Trucker Tools with their broker or shipper partners is that this is, tracking and understanding where assets are is just the way of the world, especially in this really fraud-rich market we have. So there's a couple of options. You could either share your location in a safe, hands-off way with a lot of data privacy surrounding it. I'm happy to talk more about that and how we respect carrier data privacy, but it's either that or you're going to have phone calls from some track and trace team at a brokerage every hour. And you can really pick which you think is your preference. And 9 times out of 10, a carrier is going to really much prefer just sharing the location, especially when they feel confident that we're not doing anything that they wouldn't feel comfortable with their data.
I think it would make them a little bit more attractive to brokers too, right? If they're able to drive that efficiency into their operation.
Great point too. That is another huge benefit to tracking. Like I said, this down market has just been a boon for tracking, and has really driven a ton of adoption. And that's because shippers are able to dictate, hey, we need certain levels of service, and we don't just need one location update. We want consistent tracking. So it's a way for not only brokers but also carriers to really stand out on those scorecards that, hey, we're going to deliver this level of service, and on a reliable, consistent basis. And that's really how you're going to win in this market.
Does it help too on the fraud side? Does it help the carrier prove who they are?
Yeah,
I am who I
yeah.
say I am.
Absolutely. I mean, integrating your ELD is such a secure way to kind of build confidence with a broker that you're not a nefarious bad actor.
Yeah, makes sense.
Kary, most carriers electing to keep the tracking on during the entire journey of the load, but also after that, or do they elect not to?
Most choose to end it after reaching the delivery geofence, and that's a benefit of Trucker Tools. We have automatic geofencing. We turn tracking on and off based on when we know loads are starting and upon certain stage gates when they enter and exit geofences. So we take care of all of that. But most carriers are happy to have it on during the entire duration of a load up through delivery, but then they like to turn it off.
I would have thought it would be advantageous to have it on all the time, because then it allows some of the providers to see where the capacity is, see where they are, and match loads to them. Do you think that's going to be the next sort of product iteration?
Yeah, so that's something we actually talk about a lot, and are actually have already integrated a bit into some of our Trucker Tools capacity products, depending on which carriers are sharing location availability with us. What I think is actually going to be most interesting is a feature we're working on right now we're calling it internally text to verify, where the problem we're solving is a broker has a carrier, calls and says, okay, you ready to pick up this load? The guy's like, oh yeah, I can be there soon. But you really want to verify where that carrier is. So we have a single instance text that can be sent for a carrier to then share its location back with the TMS. So we can verify, okay, he's not 8 hours away, he's an hour away. He will be able to be at the pickup at the appointment time.
Yeah. And even if they're an hour away, that could turn into 3 hours with traffic. So you also need to know that.
Exactly.
Yeah, very interesting. I would have thought it's one of the really obvious things carriers would want to do. We've, in previous jobs, I've been able to reverse engineer ELD data feeds by looking at just GPS plots on a truck. You can actually create the entire hours of service stream. You've got to geofence all the rest areas and truck stops and all that sort of thing, but it's doable. Talk a bit about trailers. So there's not a lot of trailers have telematics on them, but in that waterfall concept you talked about, do trailers come into that in terms of providing location data?
Yeah, so trailers do, and there are two specific use cases where trailers have been increasingly important for us, and I think we're starting to see more and more just wider adoption of trailer telematics. The first is in the reefer space, so just something like Thermo King or Skybets, any of those that have actually integrated temperature connections. So we developed a temperature tracking module for our brokers about a year ago, and just requires the carrier integrating not just the tractor, but also the trailer ELD device into our network, where we're able to get real-time multi-zone temperature tracking that can provide updates when a temp has gone off the rails, or something's gone out of zone, so that it can really speed up on the claims side for both the carrier and the broker. So we're seeing that increase. And there's actually some, Kroger specifically was the shipper that started requiring connectivity of temperature tracking devices into their one network platform. And we do that on behalf of a lot of carriers to make that process a lot easier, and a lot of brokers. So there's just been a massive adoption there. And then secondly, on the cross-border side, so as cross-border freight has, especially in Mexico, has really boomed over the last couple of years. The way delivering freight cross-border works is there are always at least 3 carriers involved. You've got if you're going Mexico to the US, you've got a Mexican carrier, then there's an actual different carrier that takes it across the border, then there's continuing on into the US. So what we found is that many of those very specific moving just cross-border loads do have trailer tracking devices. So it's a lot more valuable than having a tractor, because the tractor is just going to switch out very frequently. So we've seen increase there as well.
Yeah, I would think there's a ton of risk in that. If you've got a load of ice cream or a load of shrimp and that temperature is not right, risk is through the roof.
Yeah, exactly.
Yeah. Makes sense. On the shipper side, I think about the workflow here. Like your demand signal comes all the way from a shipper's customer, right? The shipper's customer wants to know, is my product going to arrive on time, or it's 10 minutes late? When's it going to get here? And
Yep.
then that flows down through to the broker, to the carrier. Is there options for a shipper to log in, or even have their customer log into a portal to check status on these loads, to kind of cut out that stream of information?
Yeah. So we
Okay,
have a
cool.
link that we're able to, that every broker is able to send any shipper to see their location. And then we also have a product for brokers, white labeled shipper portal, where we brand it with the broker's name and everything, branding, so that a shipper can just log in at any point and see where their freight is.
Yeah. I've heard in our shipper roundtable some that have implemented types of solutions like this, and that's their big win, is nobody's calling me anymore. I just give my customer service team the link. It's cool.
Exactly.
Kary, I think I'm going to be a guest on your new podcast. Can you talk a little bit about that?
Yeah, absolutely. We're looking forward to it.
Right.
So Ken Adamo, obviously a friend of the IQ show, DAT's chief of analytics, and myself started a podcast a couple of weeks ago called Proof of Delivery. And there's a ton of content and podcasts out there in the freight space, but what we thought was that there was an opportunity to do something a little bit different. A lot of these podcasts are more focused on having guests on and having them kind of share their story from soup to nuts. We wanted to focus on what's happening at DAT. DAT is really kind of a critical utility in the freight space. And we recognize that we have a commitment and an obligation to our customers to make sure that we're continuing to deliver innovation, new product, to help them run their businesses. So we wanted to start this up as a way to talk about, here's actually what we are delivering. Ken came up with the pun, POD, podcast, proof of delivery. But what we're doing is that we're talking about what's happening in the industry, what the industry is delivering for customers, but then also specifically what's happening at DAT, what we're working on.
Right. So a data feed just popped up. It was a YouTube video. All right. So what else is happening you've got some other podcasts out there you have the Freightvine podcast that was out. I think that was out last week.
Yep, with Chris, exactly. That came out a week or two ago.
Yep. Supply Chain Now was another one, right?
Yep, Supply Chain Now. I, for better or worse, find myself on quite a few podcasts. I don't think I'm very interesting, but apparently the market begs to differ in some ways. So I do bop around a bit, but I do actually think this freight community that's been cultivated kind of online through LinkedIn and podcasts and everything has been a huge boon for us at Trucker Tools. We're a network business. We grow as our customers grow, and our product gets stronger with every new broker that joins our network and brings their carriers along with them. So being able to really be an evangelist for that and drive sales for Trucker Tools has actually been a huge boon to our product success. And we've seen just crazy increases in tracking the core metric is compliance. So of the tracks you try to track, what percent actually track? We're well above 90% now at Trucker Tools, whereas 3 years ago we were somewhere more in the 60s. So just like being out there talking about the business, driving adoption, making product improvements has been just, again, it comes back to driven success for our customers.
How has the cultural shift been coming from, I think Trucker Tools is 15 years old. DAT is celebrating our 47th this month. How's that transition been? Some cultural differences there?
Yeah, it's definitely been a little bit different in that it just requires a little bit more coordination to make a change at DAT. There's so many more stakeholders involved. The company's 20 times the size of Trucker Tools. So that's definitely been a bit of a difference. But I think I'm not sure. I'm sure people have their own thoughts and feelings about me, but I'd like to think that some of the myself and a couple of other key leaders from Trucker Tools who have joined the team are bringing some kind of welcome speed to what we're doing and ability to just move quickly and make decisions quickly, which is something we really do at Trucker Tools to the DAT culture.
Yeah, that's cool. That founder mode.
Yeah, exactly.
Yeah. Kary, before we go, how can people get in contact with you?
Yeah, you can feel free to email me, Kary.Jablonski@dat.com, or find me on LinkedIn. Those are the best ways.
Okay, good. We'll look forward to seeing you on the Proof of Delivery podcast coming up shortly.
Looking forward to it.
Yeah. Chris Kaplis is talking to Jesus Martinez. He's a research scientist at MIT's Center for Transportation and Logistics, talking about sustainability. That also leads into Earth Day, which is today. It's the annual event to demonstrate environmental protection strategies. On next week's show, we have Jarrett Stowe from DAT. He's also from Trucker Tools. That's right, Kary?
That's right. Jarrett was one of our first product managers we hired and now is head of broker product at DAT.
That's right. Looking forward to having him on. Don't forget Road Check Week. International Road Check Week is May 13 to 15. That's just 3 weeks away. And as usual and typical to form, I expect the authorities to be out the week prior, if not earlier, just to catch everyone off guard. That's becoming an increasingly observable trend in recent years. Make sure you set up alerts for our live shows, subscribe to our channel. With that, another show is in the books. Thanks for watching. Be safe, be nice to everyone. We'll see you here next week at 10 a.m. Eastern, 7 a.m. Pacific.